Hello students, welcome to this another discussion video. So our topic is all about cost volume profit relationship. So first, let us define what is the CVP or cost volume profit relationship. So basically it's an analysis which examines the relationships among the sales, costs, expenses, and quantity or sales volume, and how these elements here would impact on the amount of the profit. So basically, what we will do is we will try to analyze how could sales price, how could cost and expenses, as well as the sales volume affect the amount of profit that a company will report or will be generating. So CVP analysis or cost volume profit analysis examines the interaction of a firm's sales volume, selling price, cost structure, and profitability. So it is a powerful tool in making managerial decisions, including marketing, production, investment, and financing decisions. So these are the common questions that usually managers address with the help of CVP analysis. So first, how many units of its products must a firm sell to break even? So through CVP, we can actually establish how much a firm should sell for them not to report any profit or loss. So at break-even point, wala tayong profit, wala naman tayong loss. Another is how many units of its products must a firm sell to earn a certain amount of profit. So, through CVP, malalaman ng entity or ng management kung ilan ba dapat or how many units or ano ba dapat ang sales volume nila para ma-achieve nila yung kanilang targeted or yung desired profit nila. Another is, should a firm invest in highly automated machinery and reduce its labor force? When an entity invests in a highly automated machinery, it means that their fixed costs or their fixed expenses will increase. So basically, if there are many machines or if heavily automated ang isang entity, most probably marami silang investment sa PPE. So pag ganun, mas malaki yung depreciation expense na kanilang i-report. So depending on the nature of the business, no, like pag mataas kasi yung fixed cost, masasabi natin na mataas yung operating leverage ng company. So depende, no? Kung ang sales volume nila is very high, so meaning if they'll opt into manual process or manufacturing of their products, so baka they'll be spending more on the labor. So take note, labor is a variable cost. So the more that you use or the more that you'll have sales volume, so it will require a higher production output. So, mas malaki yung magagastos mo sa labor. Now, if mataas yung sales volume, pero highly automated ka, so marami kang machine na in-invest, no, sa business mo, so most probably, kahit pa tumaas ang volume ng production, kasi meron ka ng fixed cost, no, at a certain level. So as long as it's within the capacity of the machine, so no need anymore to increase your fixed cost. So what does that mean? So pag ganun, pag mataas yung fixed cost na, pag mataas yung sales volume, so tataas yung sales. So pag tumaas ang sales, so malaki yung i-report natin na contribution margin. So kung mataas yung contribution margin, so marami kang amount, no, na pwedeng magamit to cover up your fixed expenses. So yung sobra, after the fixed cost, will contribute already to your profit. So mas advantageous pag heavily or highly automated ka if mataas yung sales volume mo. Kasi regardless now of the sales volume, you have a fixed amount to deduct na to your contribution margin. Unlike kung dun ka sa labor force, so since variable itong labor force, the more na tumaas yung sales volume mo, the more din na mag-i-incur ka ng labor cost. Another thing that or another question that can be addressed through the help of CVP is, should a firm advertise more to improve its sales? So, since CVP can help us determine break-even point or even the targeted sales, sales volume, for us to be able to achieve a certain amount of profit. So you are guided, or the management is guided as to like for example in a month, so ang target niya, say for example 100,000 units, but then to ensure that meron silang profit na marireport. So for example, nasa mid na ng month pero yung sales nila ay nasa 50,000 pa lang, so it will suggest that the firm should advertise more in order to improve its sales. So in that way, CVP can help the management, it will alert the management of the things that needs to be done or the things that need to be done for them to be able to achieve the targeted sales, as well as of course the profit that they're desiring to achieve. So CVP analysis is the systematic examination of the interrelationship among revenues, variable costs, fixed costs, the activity level or the volume, and of course the profit. So it permits management to predict the probable effects of its changes in price, sales volume, cost, and product mix. So since here in CVP analysis, parang yung backbone natin is variable costing. So you'll be utilizing a variable costing income statement or yung direct costing, wherein you segregate fixed cost from variable cost. And that way, since separate mo yung fixed cost at variable cost, so most probably you can predict, you can forecast your sales amount, the targeted number of sales volume that you should be able to sell. So, what are the elements of CVP analysis? So, ito yung mga items na dapat present pag mag-perform tayo ng CVP analysis. So, in terms of sales, so sales should be expressed in terms of selling price. So, this is per unit. And then the units or the volume. So it's referring to the quantity of the products that you're able to sell. Then you'll have your total fixed cost. And then you have variable cost per unit. So magkano ba yung variable cost per unit? So per unit siya, since it would depend on the level of sales volume, or kung magkano yung nabenta mo. And then, sales mix naman is for multiple products. So, actually, sales mix is parang, it's a ratio wherein you're going to consider kung ilang product ba. Like, for example, the company is selling 2 products, A and B. So, pag sinabing sales mix, so, for every one unit of product A na masisell mo, ilang units ba ng product B ang masasell din ng company? So, for example, if that's 1:4, meaning for every 5 products na benta ng company, ibig sabihin nun, product A is 1, or ang nahalin or ang nabenta sa product A is isa, and then 4 yung sa product B. So, that's 1:4. So if you are going to translate that into ratio, then that is for A, that's 1/5, and then 4/5 for your B product. So that is sales mix na yung what's the combination of the products that you are selling, whenever you sell them. Okay, so next would be the application of CVP analysis. So, saan natin pwedeng gamitin ang CVP analysis? So, first is, pwede talaga natin siyang gamitin, no, sa planning and decision making. So, this may involve choosing the type of product to produce and sell kasi makikita mo kung ano yung product na malaki yung contribution margin, for example. So, malaki yung mako-contribute para ma-cover up ang ating fixed cost or fixed expenses. So, another thing is that the pricing policy, no? Anong pricing policy na ipa-follow natin? Magbe-based ba tayo sa product cost? How much should be the percentage, no, of the margin sa ating product? Also, what marketing strategy to use, and the type of productive facilities to acquire, no? Kung highly automated ba or magre-rely ka ba sa labor. So, yan. So, it will also depend on the volume or your structure, no? Yung nature ng iyong operation. So, ano yung mas applicable sa iyo or mas advantageous on the part of the entity. So, we have here the contribution margin income statement. So, as you can see here, para siyang yung sa variable costing na income statement or direct costing. So, again, basically, yung CVP analysis ay parang yung backbone niya ay variable costing, no? Na isegregate natin dapat yung variable cost at yung fixed cost para mas ma-predict natin yung ating outcome in the future. So, ang tawag sa kanya ay contribution margin income statement simply because in this particular income statement, i-highlight natin kung magkano ang ating contribution margin. So, ano ba yung contribution margin? Paano ba i-compute ang contribution margin? So, contribution margin is the difference between the sales and the variable cost. So, you have this format here. Start ka with your sales and then you deduct the variable cost. So, lahat ng variable cost dapat i-deduct mo dyan, no? Regardless of whether it's a product cost or it's a period cost. So, i-deduct mo lahat dyan. And then you'll get your contribution margin. So, that's the difference between the sales and the variable cost. So, itong amount na to, ito yung magka-cover up sa fixed cost mo. So, pag may sobra pa from the contribution margin after deducting the fixed cost, dyan tayo magre-report ng income. So, before tax or yung tinatawag natin na operating profit. So, take note that itong statement or income statement na to, as what we have been mentioning before, na ito siya ay gagamitin lang na management for internal purposes lang. So, hindi ka pwedeng magpalabas, no, or mag-release ng income statement under variable costing sa public. So, the format, no, of this contribution margin income statement would facilitate CVP analysis. So, yan. So, ano yung mga assumptions under sa CVP? So, that all costs are classified either as variable and fixed para again, mas ma-predict natin yung mga cost. And that cost and revenue relationship are predictable and linear over a relevant range, no, of activity in a specified period of time. So, take note na dapat you are dealing with in the relevant range, no, for those items to be true. So, like for example, your fixed cost is fixed and total at a certain activity range, no? So, pag lumampas na sa, for example, sa maximum, it means na hindi na magiging fixed in terms of total kasi mag-need ka na ng additional machine. So, additional gastos naman yun. So, the total variable cost change directly with the cost driver, but variable cost per unit are constant over the relevant range. Ito yung behavior ng variable cost. So, in terms of total, it will vary with cost driver. In this case, usually, mga activity levels natin or units produced. So, the total fixed costs are constant in terms of total over the relevant range. But in terms of per unit, take note that it vary, no? it varies inversely with the cost driver or volume. So, ibig sabihin, yung total fixed cost natin, constant siya. Pero yung fixed cost per unit mo, it's inversely related to your cost driver or volume. Say, for example, normal capacity ay 10,000. So, if that's the case, tapos yung actual na output or say actual na sales mo ay ano lang 8,000 lang. So yung final yung total cost ng yung total fixed cost ay hahatiin lang instead of 10,000 units magiging 8,000 units na lang yung maghahati-hati sa total fixed cost. And that way since bumaba yung sales volume, so yung cost no per unit ng fixed cost ay magi-increase siya. Then, next is selling prices per unit and market conditions remain unchanged. So, that's an assumption. CVP, and that production always equals with sales. So, walang change in inventory. So, if the company sells multiple products, then the sales mix is also constant. Technology as well as the productive efficiency is constant, and the time value of money is ignored. So, ito yung mga assumptions na gagamitin natin under CVP analysis. So, punta tayo dito sa CVP graph. No? So, itong y-axis na to, this represents the peso value. And dito sa x-axis, you have the activity level, no, or units. So, itong black line na to, straight line, this represents expenses. So, if you're to look at this, as observed, yung fixed expenses natin, yung fixed cost natin ay constant, no? Regardless of the activity level, it's constant, no? At this level. Now, your variable cost, itong red line na yan, yung red line na from your fixed expenses, so plinat yung variable, ito. So, yung red line na yan, actually, that represents your total expenses kasi it comprise of the fixed expenses here, ito, and then the variable expenses in this particular area. So, yan. So, if you have observed, no, itong variable cost na to will vary directly with activity level. So, magkadaghan ang atong activity level, magkataas po ang atong variable cost in terms of total. So, if you are to plot, no, line, so katong intersection between the among the expenses, the total sales, and yung line na yung plinat, no? So, yung kung saan yung point wherein nag-intersect silang nag-intersect ang total expenses saka yung kanyang total sales, that's actually your break-even point. So, ibig sabihin, at that point, no, like, say, for example, dito, almost 400 units, no? So, for almost 200,000 pesos. So, yun yung kanyang sales. At that point, if ganun yung sales mo, then break-even ka. Walang profit, walang loss. No? So, also, itong area na to dito, this is actually your loss area. So, ibig sabihin, class, example, kung ang nahalin lang is 300 units, so meaning diri na siya dapit, so mabilong ka sa loss area. No? If your sales, say, for example, is below 150,000, so na there sa mga 300, it means that you'll be reporting a net loss. Okay? Dito naman na area, this is your profit area. No? So, that's your profit area. So, for the profit area, ganun lang din, no? Say, makahalin ka o 600 units. So, diri na siya dapita, mga almost 300,000. So, if that's your sales, then you would expect, no, that you'll be reporting a profit for the company. Okay, so what are the factors that affect the profit? So, ano yung mga factors na naka-affect ng profit daw? So, as we know that profit is excess, no? Or the net amount after deducting your total cost and expenses from your total revenue. So, what are the factors affecting the profit? One, selling price of the products. Although, this one have also to be careful, no? If you are to increase it because it's possible that your competitors, no, your competitors have a cheaper price. So, it means na baka hindi na bumili sa inyo yung customers. So, the number of units sold, the unit variable cost, the total fixed cost, and the mix or combination of products sold. So, ito yung mga factors affecting the profit reported no, for this particular entity. Okay? So, all these factors should be considered in profit planning. So, CVP analysis shows the relationship with these variables in which form the basis for profit planning. Okay? So, we'll proceed now to break-even analysis or the break-even point. No? So, ano yung break-even point? I think familiar kayo dito na ito yung point, na ito yung activity level, ito yung sales volume we're in. Wala tayong profit pero wala naman tayong loss. No? It is in equilibrium daw. It is the point at which a business entity neither makes a profit nor sustains a loss. So, ito yung ating formula sa single product na break-even. So, in terms of units and in terms of peso value. So, yung formula is total fixed cost, you divide it by the contribution margin per unit if you want na yung outcome is break-even point in terms of units. Kung pesos naman yung gusto mo, then total fixed cost is divided by the total contribution or the contribution margin ratio. So, ito naman, prorate mo lang, no? Pag-compute nito, that's contribution margin over your sales. No? So, ito yung ating mga formula sa baba. So, may sample problem dito. So, consider the following data. So, say for example, your sales is 10,000. So, ito yung total. Variable cost natin ay 6. Of course, based sa units sold. So, yung contribution margin natin ay 40,000. So, minus a profit of 10. The fixed cost of 30,000. So, magre-report tayo ng profit na 10,000. So, if you want to know how much is the break-even point in terms of units, all you have to do is divide your total fixed cost by the contribution margin per unit. So, if that's the case, then ito yung itsura na ng computation natin. 30,000, you divide it by 4 to get 7,500 units. So, meaning, if the company is able to sell below 7,500, it means that they will incur a loss. If ever they will sell more than 7,500, so most probably you'll be reporting a profit. Pero kung 7,500 lang, no profit, no loss. So, what if your company is offering multiple products? They're selling not only one product, but more than one products. So, this is how you compute the break-even point if you have a multiple product or you have multiple products. So, first is you have to determine the weighted average contribution margin per sale or contribution margin per mix. So, this is the formula. So, what you're going to do is you compute contribution margin per unit for each product. And then you multiply it by the sales mix ratio. So, sales mix ratio is the again, the ratio of how many products A are going to sell for every product B or C that is being sold. So, para makuha mo yung weighted average na contribution margin. So, pag meron ka ng weighted average contribution margin, then you can compute already for your break-even point in terms of units para sa lahat ng products. So, that is your total fixed cost. You divide it by the weighted average contribution margin per unit So, yung result nito ay yung break-even point in units sa lahat ng products. So, ibig sabihin, yung makakompute mo dito is yung break-even point, the total number of units na dapat mo mabenta walang loss or walang profit ang iyong or wala kang loss or wala kang profit for a certain period. So, yung break-even point in pesos naman, that is your total fixed cost, and you divide it by the weighted average contribution margin ratio. So, this time, percentage naman yung iyong i-divide or gagamitin as your denominator. So, after determining the total or the break-even point in terms of units or in terms of peso value for all products, so pwede mo nang compute din yung break-even point ng bawat isang product. So, yung tinatawag dito na individual break-even point in units. So, you have just to multiply the sales mix ratio to the number of sales, no? And the individual break-even point in pesos by multiplying the individual break-even point in units to the selling prices. So, this is how you do it, no? So, yung break-even point in units, no, sa lahat ng product, like for example dito, so multiply mo lang yung sales mix ratio. So, para makuha mo yung individual na break-even point in units, no, ng bawat isang product. So, if you are to multiply that with the respective sales price, then makukompute mo yung break-even point in terms of peso value. So, meron tayong sample problem dito, no? So, si company, itong company nito sells products A, B, and C. So, ito yung kanyang data na about the 3 products. So, you have selling prices, no, the respective selling prices, the variable cost per unit, and then you also have the contribution margin per unit. No? So, ito yung kanyang sales in units, 1,000, 2,000, tsaka 5,000. So, ang total mo is 8,000. So, ibig sabihin, for 8,000 units na mabibenta ni company, 1,000 nun ay product A, 2,000 nun ay kay product B, and 5,000 nun ay kay C. So, in short, itong sales in units na to, ito yung magiging basis mo para makakuha ka or makakompute ka ng sales mix. So, that's 1,000 is to 2,000 is to 5,000. Yun yung sales mix ratio for these 3 products. So, meron tayong total fixed cost na 101,680 pesos. So, first is mag-compute tayo ng weighted average contribution margin. So, as mentioned, isa-isahin mo yung product, no? So, you have the sales product A, product B, and product C. That's 100 times 1,000, the sales in units. Then, 120 times 2,000, so that's 240. That's 50,000 times 5, that's 250,000. No? So, ito yung total. And then, your variable cost naman, so ganun din. So, 60 times 1,000, so 6,000. So, ibig sabihin, for product A, your contribution margin ay 40,000. So, pwede din shortcut na kasi meron na tayong contribution margin per unit dito na 40. Pwede i-multiply mo na lang agad sa sales unit or sales in units na 1,000 para makompute yung contribution margin in terms of total ng product A. So, sa product B, ganun din. So, yung 180, that's actually 90 times 2,000. So, para makompute yung 180,000. So, yung contribution margin natin ay 60,000. So, for letter C, ganun din. 50 times 5,000, so that's 250. Then 40 times 5,000, that's 200. So, yung difference nila ay 50,000. Or simply 10 pesos per contribution, the contribution margin per unit. You just multiply that by 5,000 para makompute natin yung 50,000 na contribution margin in terms of total. So, with that, ito na yung total, no, ng mga tatlong products na yan. So, to get your contribution, so ito yung contribution margin mo, total. So, if you are going to divide that to 590, makakompute mo yung 25.42, that's your weighted average contribution margin ratio. So, ito yung contribution margin ratio or contribution margin mo para sa tatlong products. Okay? So yan, no? For the purpose of the contribution margin, the weighted average contribution margin ratio, so yung sales mix ratio natin is determined using the sales volume in pesos. Okay? So, meaning, if this is our sales mix, magkano yung weighted average contribution margin per unit. So bigyan tayo, ito given na to, 40, 30, and 10. So, multiply lang natin with the sales mix. So, paano ito na-compute? That's again, 1,000 divided by 8,000. So, yung ating given dito na sales in units. So, yun yung basis mo sa sales mix mo. So, 1,000 divide 8,000, 2,000 divide 8,000, 5,000 over 8,000. So, ito yung kanyang ratio. 12.5, 25, and 62.5. So, yung total nito, no, yung summary, yung sum ng bawat isang product na to, that comprise your weighted average contribution margin per unit, no, which is 18.75. So, for the purpose of computing the weighted average contribution margin per unit, the sales mix ratio is determined using the sales volume. Okay? So, if you are to compute now the company's break-even point, so ito na yun, your fixed cost, you divide it by the weighted average contribution margin per unit. So, that's 101,680 divide 18.75. So, ito yung total mo na break-even point in units. So, ibig sabihin, dapat yung total ng product A, product B, and product C na mabenta mo should be 5,423 units. So, in terms of peso value, dapat ang total sales mo ay 400,000. So, if you wanna know magkano dapat or ilan dapat, no, of the 5,423 units, ilan dapat yung mabenta na product A, product B, and product C respectively. So, compute natin yung individual na break-even point. So, ito yung ating break-even point in units na total natin sa all products. So, just multiply it by their respective sales ratio. So, or sales mix ratio. So, ito yung break-even point ni product A, ni product B, and ni product C. Then, simply multiply the respective sales price para makompute natin yung break-even point in terms of peso value per product. So, in this case, ito yung break-even point ni product A, ito yung kay product B, ito kanyang product C. So, supposedly, it should tally to 400,000, but since meron na tayong pag-round off dito sa 5,423. So, that's why there's a difference of mga 30 pesos na difference. Pero, supposedly, dapat equal silang dalawa. So, that's break-even point. So, you're just trying to establish kung at what point ba na ang entity walang profit, walang loss. So, basically, because we wanna know kung ano bang gamit ng break-even point na. So, we wanna know kung at what level ba na makakover up na natin yung fixed cost. So, of course, yung desire ng company is to earn a profit. So, with that, we can still utilize, we can still use the the CVP analysis for us to be able to plan our profit, to be able to determine kung magkano ba dapat yung imabebenta ng isang entity para maka-earn siya ng profit. Or say, for example, ito yung gusto kong profit. So, since ito yung gusto kong profit, then, how many units should I be able to sell to be able to achieve this particular profit? So, again, we can still utilize CVP analysis with, if you want that to happen. I mean, if you want to predict your the number of sales that you want, or the number of sales volume that you have to sell in order to achieve your desired profit. So the break-even formula may be expanded to compute the required sales in units and in peso. So to earn the desired amount of profit. So for profit planning purposes, sales with desired profit in units and pesos can also be determined using the following formula. So kung titingnan natin dito, yung formula sa profit planning ay parang minodify lang natin yung break-even point na formula. So for example, for a single product, so if you want to earn a certain amount of profit before tax, so this is how you compute for the required sales in units. So meaning, kung gusto mo ng ganitong profit before tax, so dapat ito yung number of units na dapat mabenta mo. So what is this? This is your total fixed cost plus your desired profit. So before tax yan, then you divide it by contribution margin per unit. So if you want to compute for the required sales in terms of units. So if you want naman na yung desired required sales in terms of peso, actually you can just multiply whatever that you have computed here, your required sales in units. If you are to multiply that by the selling price, makakompute mo na itong required sales in peso. But, say for example, the information or the given data will not allow you to do that. So, what you're going to do is, yung required sales in pesos mo, makakompute mo by adding first your total fixed cost plus your desired profit before tax. Then, you divide it by the contribution margin ratio. So, again, if you are to look at this formula here, it is just simply modifying our break-even point formula to be able to include, consider your desired profit. So, say for example, you want to earn a desired profit and this time the desired amount mo ay after tax na. So, ito yung formula mo. So, most probably, yung i-add mo dito is net profit na. So, that's that's total fixed cost plus your net profit divide 1 minus tax rate yan. Say for example, if your tax rate is 30%, so this is your net profit, so that's after tax. So you divide it by 70%. Say for example, again, if the tax rate is 30%. So, what you're trying to do here is actually, parang i-gross up mo lang, para makompute mo yung income before tax. Kasi ito yung gusto mong, ito yung gusto mong amount, ito yung gusto mong profit, which is net already of tax. So, computein lang natin kung magkano ba dapat yung gross up na value nito by dividing it by 1, then minus the tax rate. Okay? So, after that, you divide it by the contribution margin per unit. So, kung required sales in pesos naman, as I've said, yung na-compute mo ditong required sales in units, pwede mo na i-multiply yan with your selling price para ma-compute mo yung required sales in pesos. But then, again, if the information na available will not allow you to do that, then you can compute also for the required sales in pesos by adding the same lang, the total fixed cost plus your net profit over 1 minus the tax rate. You divide it by the contribution margin ratio. So, yung kaibahan lang, yung numerator mo parehas lang. So, ang nagkaiba lang dito tayo sa denominator. Kasi dito per unit, pero dito ratio na yung ginamit or percentage na yung ginamit. So, for the multiple products, so ganun lang din, no? Except that, dito sa required sales in units, ang numerator mo actually the same lang sila. Total fixed cost plus desired profit. Yung denominator mo na lang ay weighted average contribution margin per unit. So, same thing here, yung denominator mo ay weighted average contribution per, ratio, no? Weighted average contribution margin ratio. So, yung numerator, the same lang naman. Okay? So, ang makakompute mo dito is yung total required sales in units. So, if you want the individual per product, so again, simply, whatever is computed here, you simply multiply that with the sales mix of each product. And then, makakompute mo na yung required sales in units per product. So, if you multiply that with the respective selling prices, then makakompute mo yung required sales in peso per product. So, yan. So, yung after tax naman, yung gusto mong ma-earn or yung ma-compute, no? After considering na the tax effect. So, ganun lang din, no? Yung numerator mo, same lang dito sa taas, except that yung denominator mo, weighted average contribution margin per unit and weighted average contribution ratio. So, yan. Okay? So, we have here a sample problem. So, say for example here, Maki sells a single product for 10 pesos. So, ito yung selling price niya. The variable costs are 4 pesos per unit and fixed cost a total of 120,000 at a volume level of 10,000 units. So, the management would like to earn a target profit before tax of 240,000. So, ito, for you to be able to compute, no, kung magkano ba dapat ang level, no, ang level ng sales volume niya. So, if you want to know the required sales in units to be able to earn a profit before tax up to 40,000, then this is the formula. So, you have your fixed cost, 120,000 as given. This is your desired profit. Then, you divide it by the contribution margin per unit. So, which is 6 pesos. So, that's 10 pesos minus 4. So, you have 6 pesos. So, that's 360,000. You divide it by 6. So, you'll have 60,000 units. So, meaning, Maki should sell 60,000 units to be able to sell, no? To be able to earn a total of a net profit before tax of 240,000. So, actually, class, you can you call this, you can check, no, whether our item or our computation is correct, no? Pwede kang i-check natin kung tama ba, no, na at 60,000 units na sales volume, makaka-earn ka ng 240,000 na profit before tax. No? So, let me just open an Excel file to be able to demonstrate that. No? So, say for example, here, lakihan natin konti. So, say for example, your sales, no, as mentioned na, ano daw, 60,000 units, na? So, multiply mo yan by the selling price of 10. So, it will give you a total amount of 600,000. Okay? Then, i-deduct natin yung ating variable cost. Variable cost. So, ang variable cost natin ay, as mentioned here, is Magkano nga ba yun? That's 4 pesos per unit. So, that's 60,000. Multiply lang natin by 4 pesos. So, it will give us 240,000. So, then you get the difference. So, ito yung difference natin. So, this is your contribution. Contribution margin. So, you have 360,000. So, if you are to deduct your fixed cost, so the fixed cost actually is reported at 120,000. Okay? Oh, that's sobra na. So, you have 120,000. So, kung i-check natin, ito yung profit natin. So, this is your profit pero before tax. So, ibig sabihin, tama yung na-compute nating number of units. Kasi at 60,000, looking at this income or direct costing no, na income statement, so, meron tayong profit before tax na 240,000. So, at 60,000 sales volume, makaka-earn ka na ng 240,000 na before tax. Okay? So, if you wanna know also how much is the peso value of that break-even, or I mean the target sales volume. So, ito class, yung 60,000, pwede na multiply mo na lang agad by 10 pesos the selling price para makuha ang 600,000. Pero pag hindi naman given yung selling price or there's no way to compute for that, then pwede nang gumamit na lang tayo ng formula. So, that's total fixed cost plus your desired profit divide, this time, contribution margin ratio. So, that is 6 pesos divide 10 or 60%. So, yung total nito, the desired profit plus your fixed cost, nga 360,000, you just divide that by 60% para makuha mo yung required sales in peso. Okay, so that's it for the profit planning, no? The targeted sales volume and peso value of your sales, no, to be able to achieve a certain amount of profit either before tax or after tax. So, next topic will be the margin of safety, no? So, pag sinabing margin of safety, it indicates the amount or level of sales by which actual or planned sales may be reduced without incurring a loss. So, it is the amount of peso sales or the number of units by which the actual or budgeted sales may be decreased without resulting into a loss. So, bali yung margin of safety, parang i-compare mo yung current mo na selling price or sales volume versus the break-even point. No? So, parang ito yung buffer mo na hindi ka pa malulugi, no? Well, hindi ka pa makaka-incur ng loss if ever, like for example, your sales volume will decrease and then, say for example, your current sales volume level is 100,000. So, if you have determined that your break-even point is 60,000, so meaning meron kang margin of safety na 40,000. So, yung sobra ng sales volume mo versus the break-even point. So, meaning yung 40,000 na yun, it will also, parang yung implication niya is that you can, yung sales volume mo, pwede mag-decrease up to 40,000 na hindi ka pa malulugi. Kasi, kung mag-decrease mo ng sales volume mo, for example, from 100,000, mag-decrease siya ng 40,000, still, nandun ka pa rin sa break-even point na level. So, wala pa ring profit, tsaka hindi ka pa malulugi at that point. So, that's margin of safety. So, ano yung formula niya? So, yung margin of safety mo is simply your sales in terms of peso value minus your break-even point in terms of peso value. Or, pwede rin per unit, yung margin of safety mo per in terms of units is equivalent to selling price or sales, no? Sales in terms of units. So your sales volume mo minus the break even point in units. No, so ito ay margin of safety per unit. Ito naman margin of safety ratio. No, so ito yan ratio. So you have margin of safety per peso value divide the selling price. So ito dapat ito, bakit ganito yung formula sa margin of safety per unit? So dapat ratio na ito, no? Ito na formula, ratio. So whatever is your margin of safety, you divide it by the sales volume in terms of peso, then you'll get your margin of safety ratio, or margin of safety in terms of units, then you divide it by the margin of safety per peso. So dapat ito margin of safety in terms of peso value. So parang dapat ganito siya para makuha. Okay. Para makuha ang per unit, so pag meron ka ng margin of safety in terms of peso, you just divide it by the sales, no? Sales price, no? Sales price ito pala para makuha niyo mo, or selling price. So for example, the margin of safety in terms of peso is 100,000, and then the selling price is 10. So para makuha yung margin of safety in terms of units, so divide mo lang peso value by the selling price na para makompute ang units. Okay? So we have your example problem. So if the company's present sales is 100,000 units, or 500,000 in terms of peso, because the selling price is 5 pesos, and the break-even point is 60,000 units, or 300,000. So how much is your margin of safety? In terms of peso, that is 500,000 minus 300,000. So the margin of safety is 200,000. So kung gusto naman in units, so that's 100,000 units minus 60,000 units. So para makuha yung margin of safety na 40,000. So if you want, no, pwede rin ganito, yung 200,000 mo na margin of safety in pesos, divide mo lang by selling price of 5 para makuha yung 40,000 units. So kung gusto mo margin of safety ratio, so your margin of safety na 200,000 divide by the sales, no, in peso. So you have 500,000. So that's 40,000. Or 40,000 units, the margin of safety divide 100,000 units na your so the product, or the quotient of that is 40%. So your margin of safety ratio. So again, it means that the company can reduce its sales price, or its present sales price of 500,000 by 200,000, or by 40,000 units, or 40% without incurring yet a loss. Kasi at that level, dun siya pa, or nasa break-even point pa siya na level. Okay, so we're down to our last topic here. You have the operating leverage. So, ano yung operating leverage? No, it measures the effect that a percentage change in sales revenue has on a pre-tax profit or income before tax. So, meaning class, no, pag sinabing operating leverage, so, paano ba maapektuhan yung net profit mo, or yung profit before tax mo, given a certain percentage change in your sales revenue. So it is a principle by which management in a high fixed cost industry with a relatively high contribution margin ratio or low variable cost relative to sales revenue can increase profit substantially with a small increase in sales volume. So pag mataas yung operating leverage mo, kasi mas malaki yung fixed cost mo, sabi dito, if ever merong percentage change in your sales, malaki daw yung effect niya sa pre-tax profit mo. So, pag mataas ang operating leverage, so meaning highly dependent sa fixed cost, no, or mataas yung fixed cost ng company. So, sabi niya dito, pag kahit na small increase lang ng sales volume, malaki na yung impact doon sa profit before tax ng company. So, in short, pag mataas ang operating leverage, kasi nga mataas yung fixed cost, so konting increase lang sa sales volume, so malaki na yung impact sa sa profit. So, in the same manner, mag-decrease yung sales volume kasi mataas yung fixed cost mo. So, malaki din yung impact na decrease sa net profit or sa profit before tax mo. So, this measure is typically called the operating leverage or the degree of operating leverage. And paano siya kinocompute? Ganito yung kanyang formula. No? Your contribution margin, you divide it by the income before tax. So, as pre-tax profit moves closer to zero, the closer the company is to the break-even point. So, this will yield a high degree of operating leverage. So, as the sales volume increases, the contribution margin and the pre-tax profit both increases also. And consequently, the degree of operating leverage becomes progressively smaller. So, hence, the degree of operating leverage is related to the distance between the break-even point and the actual or planned sales volume. With an increase in sales volume, income will increase by the percentage increase in sales volume multiplied by the degree of operating leverage. So, merong sample problem dito, no, to show that na paano ba mag-compute ng degree of operating leverage. So, sabi niya, contribution margin, you divide it by income before tax. So, that's 20,000 divide 8,000. So, it will give us how much? 2.5 times, no? So, yung degree of operating leverage, so, ibig sabihin nito, pag nag-increase ng 10% ang sales volume, it means that the operating income or yung income before tax natin ay mag-i-increase siya ng 2.5 times. So, for example, yung 10% increase, so times 2.5, so magiging 25%. So, nag-increase yung sales mo ng 10%, yung net profit mo before tax, no, yung profit before tax mo ay mag-i-increase siya by 25%. Kasi nga, 2.5 times yung degree of operating leverage ng entity. So, parang advantageous kapag nag-increase yung sales. Pero very disadvantageous naman pag nag-decrease yung sales pag mataas ang degree of operating leverage. No? Simply because if you have a high operating leverage, ibig sabihin nun, malaki yung fixed cost mo. So, pag nag-increase pa yung sales volume mo, so marami ng sobrang contribution margin, no? After covering the fixed cost. So, malaki yung impact niya sa operating profit mo. Pero pag naman, pababa yung sales volume, no? Or nag-decrease yung sales volume mo, malaki din impact no? Since mataas yung fixed cost mo, tapos nag-decrease yung iyong sales volume, so meaning magde-decrease yung contribution margin mo. So, ibig sabihin nun, konti na lang or no, you only have a small amount to cover your fixed cost. And in that way, it could really affect your operating profit. Okay, so that's all for this video and I hope you learned something from this. Bye, class!